Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the three major US indexes. Apologies for not posting any videos last Thursday and Friday. As you can probably see from my background in today's video, I'm in a completely different apartment, and that's because I have recently reallocated my life from the UK to Dubai. So I'm officially a resident here now in Dubai, trading full-time. So thank you very much for your patience over the past couple of weeks, as my videos probably haven't been to the high standards that that I wish to post them out on, in normal times. But as I just mentioned, I'm all set up here now in Dubai, so videos should be on point from here onwards. But let's get started here with today's video. S&P 500 currently finds itself trading at 4,971. Of course, the last couple of weeks we've seen a big move lower in asset prices, especially the US stock market. And this has been, due to a few reasons. Firstly, if we just quickly go over to the 10-year, the TNX, this thing has just continued to rise higher and higher and higher. I currently find myself trading at 4.623. But the good news is that I do expect us to start to peak any day now and to start to roll over down towards 3.25% by August. That's what my cycles are telling me. As well as that, just to add the pressure, we've also seen the dollar rise significantly. And as many of you know already, the majority of US businesses actually do business outside the US. So, a higher dollar means higher FX headwinds when bringing in foreign currency back to the United States. So that's not good. We need to start to see this start to peak as well. But let's just quickly look at the S&P 500. We've broken below the 0.23 fib area, which sat around 5,004. Now that needs to obviously be corrected. We need to start to see the market trade back above 5,000. But I do believe that there is a possibility we could go down towards 4,800, 4,800 was roughly the highs that we saw back in, I think it was the last month of last year, back in 2023. So there could potentially be a retest of that area for some support. But the markets, the futures especially, they were trading significantly higher going into the open today. And I did put a message out over on my Signal team. And I said, team, I wouldn't be buying here. I actually want to see the opposite. I want to see the markets open with the futures down significantly, and for the potential of investors to start buying up these shares at a cheaper discounted price, and for us to end the session back in green. Those are typically the characteristics that I look in the market when looking for a bottom. The good news is that I do think that we are close to a bottom in terms of time preference. We have the RSI. It's currently trading at around 30. We have the fear and greed indicator that's now it's basically knocking on the door to extreme fear. We're currently still in the fear category, of course. So we are slowly getting there. It might just take a few days for this to kind of materialize. But one thing that's very interesting is that we are seeing money flow out some of the high flyers, and that's that's definitely evident here in the Nasdaq100. Again, we're pretty much flat for the day, but we were up around roughly 1% going into the open. We've given up all those previous gains, and I wouldn't be surprised if we were to continue trading lower here. Next area of support, in my own humble opinion, is 0.382 fib area, which sits around 16,781. So we could potentially see a further 300-point decline from current prices. But again, guys, I am expecting a good buying opportunity here in the coming days and weeks ahead. But there's definitely evidence of broadening out here. We're seeing money flow out the big high flyers. Stocks like Nvidia, for example, that's lost nearly $300 billion of market cap over the past week. Stocks like Microsoft, for example, Apple. Apple's been horrendous as of recent. From the highs that we formed a few months ago, we've now declined 17%. So money's coming out of the big high flying names, and it's actually rolling into the undervalued part of the market, the value parts, just the stocks that haven't been so loved the past 2 years. And that's quite healthy. I think that's very healthy for broadening out in the market, because once funds do actually go to return to the high flying stocks, then of course that will and help with chances of the major indexes, the S&P, the Nasdaq, and the Dow, increasing to all new highs. And then finally, just looking at the DowJones30, from a chart perspective, this chart does look a lot more attractive. We formed a beautiful looking candle on Friday that represents a hammer candlestick, which is typically a good bullish sign, and does signal selling exhaustion. But today we're trading, pretty much flat. So I would like to see, profits built up upon this. But again, all three major indexes now at oversold levels here on the RSI. We may just need a day or two to kind of develop these oversold readings, but I think that investors will come back in. There's roughly $7 trillion sat on the sidelines, so there's plenty of money to be, put into the market to help these dips recover. I just feel like we just need some patience. We need some technical evidence of a bottom has occurred. Guys, that's going to wrap it up for today's video. Don't forget, if any of you would like to join my signal team, then make sure you visit my website, dailymarketmovements.com. I've left the website link in the description of today's video. So scroll down, click on that link. That will take you to my website. And then once on my website, just click join now. And that will give you full access to my Telegram group chat, where you will receive my own personal trades, as well as my daily market research that I post prior to US markets opening. But that's going to wrap it up for today's video. I look forward to seeing you all tomorrow, and I'll be posting a video similar time. Thank you very much, and I'll see you tomorrow.